Welcome everybody. Some really big movements today, fueled by fundamental news. We'll take a look at the stories driving things and how you might be able to potentially capitalize on some pretty nice potential entry points on a number of instruments. Now, as we get going, keep in mind that each and every trade you take has risk. So no one trade is guaranteed to make profits for you. But what we also should understand is that each and every trade that you take has a good potential for profit. And so you just have to manage risk in a way that makes sense, using stop loss or hedge positions or some other method that works for you. Maybe AvaProtect, which is a nice feature found on our WebTrader platform and our AvaTrade Go mobile app. AvaProtect is a way of protecting against any losses during defined time periods. So that's something that could be useful within your risk management plan. Thank you, Jeffrey, for that input. So as we go over things, keep in mind that we're coming from an educational perspective, and things should not be taken as financial advisement, but used as a source of knowledge to help you with hopefully more informed decisions when you enter into trades and exit out of trades. So fundamental analysis, we'll look at two basic types. We've got the kind that are scheduled on an economic calendar of some sort. Could be earnings reports, which we'll take a look at this evening. A couple big ones coming up at the close of trading today. So we'll take a look at what those instruments are. I think you might have some interest in trading on those maybe prior to the close of market today, depending if you're into trading the stocks. The earnings come out for major companies that are publicly traded quarterly. And so you can take advantage of the movements associated with those quarterly reports 4 times a year, right? And not just when the reports come out, but leading up to it, all week leading up to the economic reports, the earnings numbers for major companies. You have increased volatility on those instruments and even increased predictability because you can see, as we'll look, what the expected outcomes are. And so that guides sometimes before the numbers come out, the way someone will trade. So regular economic events, we'll take a look at some of those. Those are a bit easier to prepare for in terms of timing and scope. The other type of fundamental news would be the extraordinary kind of fundamental news, like the stimulus situation in the US. They're going to have some votes in the House of Representatives. They're going to bicker it out in the Senate. Will they have exactly enough votes, or will they fall one short? This is ongoing breaking news that can move the markets tremendously. A lot of the momentum on the markets today, with oil rising up and the major indices climbing, was because of the anticipation that about $2 trillion of stimulus is likely to pass in the US. And so that affects really the global economy, not just the US economy. And so the markets were responding to the anticipation of potential stimulus being passed in the US. Now, obviously, any reversal of that anticipation could cause a major swing the opposite direction in the markets. And I'll show how you can prepare for that type of fundamental news that you just don't know whether it will come or not. Pending orders are a good way to prepare for such potential news, with maybe buy stop and sell stop pending orders. So we'll take a look at how to maybe set things up that way too as we go through the charts. As we go along, please ask questions, give input, whatever you might need help with. I'm happy to answer questions and also to share your input with others if you have some insight into something that you'd like to share. Now, real quick, before we get into the fundamental news, just want to make sure I mentioned a couple things when we talked about risk. One was that the AvaTrade Go mobile app, which you find here, trading platforms, AvaTrade Go. The AvaTrade Go mobile app, it's great for experienced traders and also for new traders. And I know we have a mix in the webinar of maybe a number of traders who don't even have a live account yet, and others that have been with us for years and are experienced traders. The functionality of the AvaTrade Go mobile app in terms of the order window especially, it calculates your exposures for you based on your trade size, the stop loss price that you enter. It tells you what you're risking to your stop loss price, what your potential profit is to your take profit, etc. It also has advanced features like AvaProtect, which is only found on AvaTrade Go and the WebTrader. AvaProtect we'll take a look at here in a moment, but you can download the app here and you can log into the WebTrader, which has all of those same features, by logging in from the main website. And if you've been with AvaTrade for, say, a year, 2 years, 3 years longer, you might not have the WebTrader active on your account because it didn't exist then when you first created your account. If you'd like to have it, just let us know. Let your account manager know or contact support, and we can add the WebTrader platform so that when you log in here, instead of being straight away in your client area, you'll be in this platform here. This is our WebTrader. The features really I want to show you, and there are a lot of nice features on the platform with favorites lists and searching for things by category, a nice search tool, easier to find instruments maybe than sometimes it is on the MT4. Rocio, if you don't have the WebTrader platform, like I said, contact support, or you should have an account manager, I would imagine. Contact your account manager, ask to have it added. It's a very simple thing to do. It trades right on top of your MT4 and MT5 accounts. It's the same account. It's just a different user interface. You'll see the same trades on both. If I opened trades here and then went to my MT4 account or vice versa, I would see those same trades, okay? And you can switch between your accounts here. So you see here it says accounts. If I had multiple accounts set up through this user, I would see all of my live accounts, all of my demo accounts listed here, and I can switch between them within this platform, okay? Now, what I wanted to show you all is if you're trading on something that has AvaProtect, gold, silver, and FX pairings, you'll see this feature, AvaProtect. And I want to show you how that works, along with some of the other features that are on all of the instruments. So let's say I decide I want to buy on gold. Gold pushed down quite a bit today. And you know, if I want to expand the chart, I can slide it up and take a look. Maybe I want to go to like 2-hour candles, scroll back and say, wow, gold dropped to a support level over here. We see that the price has been hitting this level and going back up, hitting this level, back up, back up, back up. And here it is on the support level, testing it. Maybe it's going to go back up. It could break and drop to 1800. There's another support level down there. So you don't necessarily go all in on your move. US dollar's been strong today, so that's helping to pull gold down as well. But let's pretend you wanted to buy on gold right now, okay? And you said, okay, I want to do, I don't know, 10 ounces. And maybe I understand that gold could drop to 1800. So maybe I feel safer if I put my stop loss, and I program my stop loss here. Maybe I feel safer if I put my stop loss at 1790. Okay. After all, the FOMC committee talks tonight. They're voting on stimulus tonight. If things go bad, USD could strengthen, gold could drop, you could have big swings, or it could go up, right? There's huge news, creates huge potential. You just have to protect yourself. So if you think gold should go up, and you say, okay, I don't think it'll drop below 1800, even if it goes down before it goes up, if that's your theory. So you have 10 ounces of gold, you put your stop loss, and you say, wow, I'm risking 400 and something, and my balance is only 1600. I say, wow, maybe I don't want to risk that. All that big news is coming over the next day. Maybe instead of having a risk of $433 to my stop loss, maybe I say, you know what, I'm going to protect with AvaProtect. Not for an hour, not for 3 hours, but for 2 days. Look at that, 2 full days protection, only $105.93. So now it could go down to 1800 with the news today, then go flying up to 1900, and I can take my profit. And I never had to hit my stop loss. I never had to risk more than 105.93 for the next 2 days of coverage. The coverage expires right at that exact date and time right there. Okay. And I can put my take profit at, you know, where do I think maybe it'll go? Who knows? 1900. If they pass stimulus, maybe it goes to 1950, right? Because what happens to the US dollar if stimulus is passed? Does anybody know? if stimulus is passed, what happens to the strength of a currency typically? Yeah, exactly. Some of you are already saying it gets weaker. If stimulus is passed, uh, that means they're printing like $2 trillion of currency just to hand it out for free, to mail to like every qualified citizen and business in the US. So Tina and a couple others, Carrie Ann, the opposite. Currency tends to get weaker when you give out stimulus. The markets tend to go up. The stock market loves it. That's why it went up today, right? The indices went flying up in anticipation of easy money. Now, the US dollar strengthened today. If that stimulus gets passed, you could see a weakening of the USD rapidly. Okay, so now if they bicker on the stimulus and it looks like they're not going to pass it, they're arguing and can't, and the Democrats think they don't have enough votes, then the opposite, you could see the US dollar continue to strengthen and you could see the markets crash down. So stimulus tends to weaken currency and lift stocks and indices, and oil, as we saw today, went rushing up. Why would oil go up? Because it's paired against the USD getting weaker, and because anything that's going to spur on the economy like stimulus creates more demand for oil typically. Okay, and some of the other things with Joe Biden canceling some of the oil policies that Trump had passed, it's going to lower the amount of production of oil in the US now, and coming from Canada into the US. And so that could drive the price of oil up as well. Okay, so there are a number of fundamental things going on there with oil. So let's have a look then and understand we can use this risk management tool to protect ourselves for defined time periods. Let's say you decide, nah, I don't want AVA Protect. I'm just going to put a stop loss. Fine. Put your stop loss. If I'm looking here at the stop loss and I think it's too big of a risk, right? If I think I'm risking too much, then I either put my stop loss closer or I lower my trade size, right? So you obviously have those options. Now, we're talking about fundamental news today, and if we want fundamental news from this platform, it's very simple. Go to Trading Central. You have Market Buzz, which is fundamental news ready to go. The top trending instruments are listed with the news articles ready to go. Why would Google and Amazon be trending with so many articles? Their earnings reports are coming at the close of market today. So you can read the latest information about Alphabet and their shares and see what's going on with Google, also known as Alphabet Incorporated. And that's the case for any instrument listed in this pictogram. Okay, we can pull up GM, we can pull up GME, etc. Okay, so what articles did I find here with a quick search? And I do this each time before I trade. It makes sense. It doesn't take long. Look at the main articles. See what's going on. U.S. Congress readies first steps toward almost $2 trillion COVID relief bill. No wonder all the markets are green, right? They've been green all day. Volatility's been down all day. Okay, the weird part is the USD's been strengthening, which is the opposite of what you'd think when there might be stimulus. So that might create an opportunity. Okay, if you expect US dollar to weaken as the markets were going up and volatility was dropping and there's hopes of stimulus and the US dollar strengthened, well then maybe USD pairs are opportunistic right now to go against the USD. Okay, you think fundamentally about where do you have an advantage. Earnings calendar. We see here, and how do you find it? If you're on investing.com or any platform or website that offers the earnings calendar, on investing.com, it's right here, earnings calendar. You click on it, it loads it for you. You can look at yesterday, today, tomorrow, next week, etc. Here's Amazon and Google, otherwise known as Alphabet. You see, it tells you over here, it shows a little moon. after market close, after market close. Okay, so Amazon and Google will be having their big numbers come out after the market closes today. So we'll keep that in mind when we look at the charts and see, did those gap up today or down when the market opened? Which direction is the sentiment on those? And we'll be able to see real clear right away an easy picture about what direction you might prefer to trade if you're going to do day trading now before the markets close, to take advantage of potential headwinds leading up to the earnings reports. And you can see here what's the expectation, right? The expectation for Amazon, earnings per share, forecast numbers. And then when the numbers come in, you'll see the actual numbers. You can always check back and trade after the fact too, after you already know whether numbers were better than expected or worse than expected. We also have, if you look at the announcement here, some FOMC members in about 43 minutes, okay? In about 43 minutes, FOMC members, these are the guys who determine monetary policy in the US. They're going to be speaking, some of these folks, in about 43 minutes. Tell me that can't move the markets, right? Talk about potential there for a pullback maybe in the markets. What if they come out and talk about how bad the economy is and how it really looks bad? You could see the markets crash back down after all the optimism today. Okay, so it's good to know that these big events are coming in the near future, with earnings numbers at the close of market today and FOMC number in less than an hour. Okay, Canadian dollar. Headline says it was stronger than all of its peers. Why? Can anyone type? Why did the Canadian dollar strengthen today? One of the commodities had to do with it. What commodity is the biggest GDP producer for Canada? Biggest part of their gross domestic product. Yeah, oil. Because of stimulus potential out of the US, oil shoots up. That strengthens the Canadian dollar because the Canadian dollar loves when oil goes up, because Canada's economy is based so strongly on it. So it was so obvious today, you could have been buying on the Canadian dollar a ton. And as soon as you saw oil pull back like it did, you could have sold the Canadian dollar. And we'll take a look at that and see how easy it is when you combine the fundamentals. Okay, so let's take a quick look. I think we've got enough instruments to take a look at. Here's gold. I mentioned gold already when we looked at the WebTrader. Look at that support level here on these are 15-minute candles, right there. Okay, 15-minute candles, support, support, support. Why did the movement stop dropping here? Why did it find support here? Well, let's go to the 4-hour candles. Look over here on the 4-hour candles. We see this has been support back here. It broke once and went right back up, and it's support here, 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 tested a little bit and right back up. So this price level has been significant in terms of gold movement. It's held about 8 times out of 10 over the past, since January 10th. It was tested 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 times now on the 4-hour candles. 14 times this price level was tested, twice it broke. And both times it came right back up. That's the important part, right? It broke right back up. It broke right back up, and all other times it held above 1830. Now it's testing it again, right? So I think it has the potential to break 1830. But I think this price level down here is even more significant, and that's right around 1800. You follow this, the bottom of this wick across, and you see 1804. So if you're buying on gold now off this support level, if you can take a trade size that allows you to have your stop loss below this support level, so let's say down at 1801, and I would prefer to be, if I go to 1-day candles, I would prefer to be below the round number of 1800. Okay, so if I'm down at 95. Okay, so now if I'm bullish on gold, because maybe I think Sooner rather than later, a stimulus package will be passed, which will weaken the USD, cause inflation, thereby creating demand for gold, which is a safe haven against inflation. Okay, so if you're willing to say, I know it could break this support at 1830, even though it held quite a bit, we know it has broken. If you're buying on gold now, it would make sense to take a trade size that you could put your stop loss below 1800, this low point, to be able to stay with it just in case there's some infighting with this stimulus and gold comes down as the USD strengthens and tests 1800, you're still with it, right? The other option is, if you're bullish on gold but you think gold could pull down, is just put a pending order down here just above 1800. Put a pending order at maybe 1805 to buy. That would be a buy limit pending order. And so, what are some options? I could buy on gold. Let's say I take a buy position on gold now. Market move, and I could say, okay, I'll put my stop loss here, limited risk. I could say I'll put my stop loss below 1830, below that support level. If it breaks, I'm also going to put a pending order on gold. Switch to pending order at 1805. Okay, and put my stop loss on the pending order 1795, just below that next support level. Okay, so I'm in case the market gold goes flying back up now, and maybe I put my take profit if I'm scalping at this first resistance, or if I'm in it longer, I like this resistance level up here around 1950. Okay, that's a really nice resistance level here. Right around 1950, twice hit and came down, hit and came down. You see, I've got my take profit before that resistance. Okay, so this is very limited risk with a much bigger potential profit. The other option is to put your stop loss below the 1800 to begin with. Okay, because potentially this could come down, hit your stop loss here, then go up. And you'll say, boy, I should have taken a smaller trade and just put my stop loss below 1800 to begin with. And even if you did and put your stop loss below 1800, you still are risking a lot less than your potential profit. Okay, I kind of like this setup though, because I think if it breaks 1830 significantly, I think it really has a good shot to drop down to that 1805 mark. So very limited risk here with a large potential profit. If it breaks and hits the next support level, you're in again with very limited risk and even larger potential profit if it goes back up. Okay, you certainly could do the opposite with gold, right? You could sell gold. The reason I'm talking about buying and looking at price levels for risk management for entries for buying on gold is because the stimulus package that could be passed. And gold tends to respond to free money being handed out, to a weakening currency. Gold tends to respond by going up as fears of inflation then hit. Inflation is when the currency becomes devalued and the price of everything goes up. And so people tend to buy gold in that situation. Okay. All right. So if there are any questions on this, please ask. If we take a look then at USD Canadian. Okay. And we go to 1 hour candles. We see the USD came up, and boy, if we'd have started the webinar a couple hours earlier, that was a great spot to sell. Look at this resistance, 1 hour candles, resistance down, resistance down, resistance down, and this wick hit that exact spot and came crashing down. Why was it such a nice spot to sell from up here? Because again, fundamentally, the USD has all kinds of reason to weaken, right? It has all kinds of reason to weaken because of the potential stimulus coming. So boy, that was opportunistic. If you could have caught the USD Canadian up here, wow, that would have been a great spot to sell. It doesn't mean you can't still sell on the USD Canadian, right? If you saw fit, but maybe a pending order up here on USD Canadian. If by chance it comes back up to this resistance, that could be an opportunistic spot to sell on the USD Canadian, especially if a little bit of fear hits that maybe they won't pass the stimulus and you see the USD strengthen and then it comes up here over the next day or two, you have a pending order that kicks in, and then they pass the stimulus, which eventually something will be passed. I'm confident of that. And if by chance the USD Canadian gives you a chance to sell from a higher point up here at this resistance, you wouldn't have to risk much then to the top of the resistance in order to sell. So USD Canadian pending order, what would make sense here is if it came back up to 128, let's say 60 or 65, 1.2865. What did I do? I put the wrong type. Let's go back. Sell limit, selling from a higher point, not buy limit. I got in such a hurry to put my price. And then we say 1.2865. Let me bring that back up. Pending order. Sell limit, sells from a higher price. 1.2865. And there we are. Okay, so now my pending order gets in up here. You see the green dotted line just before the resistance. If by chance I'm lucky enough to get this to come up here one more time, right? Now, earlier today, many traders were selling off this resistance because that was opportunistic. That really was a great spot, knowing that there's stimulus potentially coming in the US to go with the Canadian as oil would go up, right? And against the USD because the USD should go down with stimulus. So it's a good pairing to pair a strong horse against a weak horse. We understand why the Canadian should strengthen and why the USD should weaken if there's stimulus. So it's a good pairing. If there's any questions on that, let me know. And stop loss on this pending order would make sense to put it just above the resistance if you want a limited risk. Okay. Let's take a look then. We have someone asking for GBPUSD. Let's look at oil first. Okay, we see crude oil went flying up, right? We understand why. We already talked about it. These are 1 hour candles. It's been going up in anticipation of a large stimulus package in the US. Also kind of bullish because of policies being enacted by the Biden administration in the US, really cutting US production of oil tremendously, the capability of production being cut tremendously, not allowing new drilling on federal lands, no new leases, shutting down the XL pipeline out of Canada, etc. So it's more of an anti-fossil fuel administration now running the US. And so this could help drive oil up. Bombo, I'm not sure what you're talking about. Which pending order? What could be a false signal? If you're talking about the USD Canadian, the idea was we're going with the fundamental news that stimulus would weaken the USD and strengthen the Canadian as oil goes up in response to stimulus. So selling on USD Canadian, if it goes to a spot you like, could make sense fundamentally. So that's what we were looking at there. Okay, so crude oil. We see crude oil went flying up. It's pulled back down a bit. Okay, so you could be looking maybe for a spot of support. So if you're looking at crude oil, we're looking down here maybe. Okay, this price down here around 54.5. Okay, if oil comes down to 54.5, it finds this support level here that we see on the 5-minute candles. This was support, drop. Resistance, sorry, old resistance becomes support. So this was resistance, and then breakthrough candle. You see the breakthrough. That was the momentum, and then it becomes support once it gets above. And so now it's near this level. If it gets near this price level down here, that would be an easy spot to go after a potential bounce back up on oil. with your stop loss just below with very limited risk. Okay, so this price level right down here where I put this second line is above the, just above the support level, the old resistance level, and looks like if oil pulls back down here, that could be an opportunistic spot to see if the fundamental news is still there, the momentum to drive oil back up. Okay. All right. Now GBP USD was requested. Let's have a look. We didn't look at a lot of fundamentals out of Great Britain, but we can still talk about the weakening of the USD in relation to the stimulus coming out in the US potentially here. So we see the pound has gained on the USD in the past hour or two, but it's in an opportunistic spot where the USD strengthened today and pulled the pound down quite a bit. So if we go back 1, 2, 3, 4, 5, 6, 7, 8, 9 hours, the pound was up here against the USD. So I think it has the potential to get back up there against the USD because it was up here just today, right? So if the USD is going to weaken in response to potential stimulus, you could think about, once you find an entry point you like, to see if the pound could reach the first resistance level here, right? The support level had already bounced off of, unfortunately. If you were looking to buy on this from the support, you're about 3 hours late, 4 hours late. You see the support here, 1 hour candles. It hit here and went flying back up. It just did the exact same thing here. It hit the same exact price level and up it went. So what we're looking at is this movement just came back up to a resistance level here. Okay, another level where this was support here, support up, support, support up, took momentum to break below that support. You see the momentum. So it will take some momentum to break above that. So for now, you could do, if you're bullish on the pound, I'm not saying you absolutely should be, but if you're bullish on the pound, two options for buying on the pound. Put a pending buy stop here. Buy stop buys from a higher point. You wait and see if it's going to break this resistance level, this old support. If it breaks the resistance and hits your price up here, you could be in with your take profit up here at the next price level and your stop loss, limited risk down here in case it was a false breakthrough. So limited risk. You also at the same time could put a pending order down here at this support level in case it comes back again. We see what happened the last 2 times it hit this price level. It went flying back up. So you could take your shot again, pending buy limit down here. Buy stop, buys from a higher point, program here in case it breaks the resistance. Buy limit in case it comes back down to the support level. That way you're in no matter what on GBPUSD. One, if it confirms a momentum by breaking the resistance. The other, if it pulls back to the support level. Gina, if you feel there's reason for the USD to strengthen again, by all means, you could sell. A sell limit could make sense here. I don't like to go against the fundamental news. The fundamental news says eventually here the USD should weaken. So that means pound would go up against the USD. So if you sell, it's purely technical. It's purely technical based. If you sell from this resistance level here, this old support is now resistance. If you sell from here, you're fighting the fundamental news, hoping it fulfills its technical movement, right? I don't like to fight the fundamental news, but you can. You absolutely could. This is a great technical entry point. You could sell and have your stop loss above the resistance here, as an example. So I understand where you're coming from, and you certainly could do that. Or if you're more bullish on the pound than you are the dollar, you prepare maybe a buy limit down here in case it pulls back down, and a buy stop in case it just straight out breaks through the resistance. Okay. All right. So let's take a look then at some indices or at some stocks. I promised. Amazon and Google, remember, have their earnings reports at the end of the day today. So what do you think the expectation is with today's earnings report when you see the gap at the open today? This was yesterday's close. This was today's open. Look at the gap. Look at the gap, and it continued to climb. Okay, so it looks like the market is expecting good numbers for Amazon. Okay, and it makes sense, right? The pandemic has caused people to order stuff online like crazy, and so why shouldn't Amazon have better numbers than expected, right? And so up goes Amazon. You could have been trading on this all day, and because we're late in the day, unfortunately, I keep saying you could have been, instead of now's a good entry point. We're setting up a lot of pending orders right now because the movements are that far through already, right? So we're waiting and hoping for pullbacks to get in on the fundamental news that we understand is occurring. So the anticipation, as soon as you saw the gap at the open, you could have bought on Amazon, saying, okay, listen, the anticipation is good news on the earnings numbers. It gapped up and not down. Trade in the direction of the gap with your stop loss back into the gap. If it goes down and re-enters the gap, then you get out, right? And you could have been up, 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 up this whole time on Amazon. Now, okay, great. If you didn't do that, then what can you do? Well, you see it's consolidated, right? Amazon is consolidated, it's gone sideways. You could put a pending order down here. If Amazon comes back down towards this open price down here, okay, if it comes back down to the open price in this range, then you could buy from down here. So a buy limit from somewhere down near the open price. If it drops down, you could opportunistically get in right above that support level then, right above the open price. All right. Another option is a buy stop if it breaks this resistance, right? And if you look at the wick, you can see it actually already went up here. You see this wick? It went way up here already. It already hit this price today and then came down and consolidated. So if you think the momentum's there, you can buy now, right? You can buy now, take profit just before the high point that it already hit today. If you're more patient, you might say, I'll wait and see if it'll pull back before I buy, right? And those are examples of buying, and I keep saying buying on this simply because that's what the fundamental news shows along with the technical. Okay, stimulus, that drives stocks up. Earnings numbers coming at the end of the day, obviously anticipating positive numbers, upward gap, that drives the price up. So you don't necessarily have to wait for a pullback to buy. Okay, so but certainly a strategy you can use is if you see an instrument gap up and then pull back to the gap, that's a spot where you could buy. Okay, and not have to risk much in case the whole thing reverses the other way. Okay, it would be going with the momentum. Google, same thing happened, right? What did Google do? It gapped up. After it gapped up, it pulled back down. That was your spot to buy again, right? Anytime it gets near that gap, when the momentum's up, buy, right? If it broke down into the gap, you could have your stop loss down here at the bottom, just below the bottom of the gap down here. Why should it break below the bottom of the gap? The news that it's anticipating hasn't come yet. So why, if it gapped up before the news comes at the end of the trading day today when they report their earnings, why should it drop down and hit your stop loss below the gap? The only way likely it will fill that gap is if there's bad news, right? If for some reason the momentum swings because the earnings numbers are bad, right? For now, the momentum seems to be up. So again, two options with Google. You put a pending order near the support level here, near the open price. If it pulls back down, that's a nice spot to buy with your stop loss down here. You don't have to risk much. If you feel, okay, I don't want to miss any further upward movement, then you could just buy now. And again, it already established a high point up here, right? It already showed that the market can get to this price level, and that was just a few hours ago. okay? And it's not like the earnings numbers are going to come before the market closes today and mess up your buy position if they came in worse than expected. All that anticipation of good news is still there until the numbers actually come. So if you wanted to buy on Google because you think, hey, it should keep going up, then by all means, you can put your stop loss below the open price. And that's about a 50-50 risk to potential profit if I put my take profit at today's high. Okay, it's about a 50-50 split. The other option, like I said, if you're bullish on this, is to put a pending order down here and hope that it comes back down. Okay, silver, good question. We have just enough time to go through silver, and then I think we'll call it quits for the evening, and I'll let you all go on about your trading. So what are we looking at with silver? Why did silver go rushing up yesterday, by the way? I don't know if any of you heard of this social platform called Reddit, okay? A lot of traders are using that platform to pool together ideas about what stocks or instruments do they want to buy. And GameStop was in the news this past few days because they all decided, because the hedge funds were shorting GameStop, selling on it in a large amount, which was driving GameStop down. And the idea with GameStop is, it's a brick and mortar place for driving in and renting or buying games. All of that's done digitally now, pretty much, right? So there's not that big of a market, just like Blockbuster as well, to go and rent movies or get your games at a store where you have to actually physically go. Those stocks have been dropping in value because of Netflix and all of these online retailers that don't require you to go to the brick and mortar stores. So hedge funds were smartly shorting stocks like Blockbuster and GameStop, etc. But what happened was all these folks got together and said, wow, the price is really low. Let's all buy at the same time. And it drove the price up enough that the hedge fund folks got squeezed out of their positions. And when you close a short position, you have to buy it, right? And so when you close your short, that buys in and actually drove the price up even more. So that's what happened. And so this happened to silver yesterday. You look on Reddit, they were talking about silver, and wow, up went silver. Pretty crazy the way it worked. Those types of moves tend to be temporary. GameStop had their biggest drop now ever over the past 24 hours. So it goes two ways. You can trade indices. By the way, guys, if you look, good question. I'm glad you asked that. So Google, you understand what's happening here, could easily pull back. You have a nice support level here. You could buy from that price if you prefer. Okay. I would prefer probably a pending order down here and hope for a pullback and then try and get a bounce. But that's up to each of you. And consider this, these stocks, you might want to close off your trades before the end of trading day today in case the earnings reports go the wrong way. You can't close your position once the market closes on these US stocks. You have to wait for the market to open and it could gap against you. Okay, it could be a huge gap if the numbers disappoint. So take advantage of what you think you know fundamentally now. Get an entry price you like. Go with the momentum as it exists. Maybe take the profit before the market closes so that you can't get surprised by earnings numbers that might not be what everyone expects. Okay, so the question was about silver. So let's take a look at silver. And then I think we got to call it quits for now. Oh, US indices. That was the other question. So the names changed, everybody. The names changed. So instead of saying instead of saying S&P 500 or US 500, it says US-500. Instead of saying Dow Jones, it says US-30. Instead of saying NASDAQ, it says US-Tech 100. The name changed. It's exactly the same instruments. And so there were emails that went out. You all must have missed it. Those of you that are asking about it, I had some emails today as well. People asking why couldn't they trade. So right click over the market watch, click show all, and that'll bring up all the new instrument names. Show all, and then you can trade on these new names for the US indices. Okay, check out that email, look for it in your inboxes, because there's some other indices that also change names. Okay, similarly. All right, so silver, let's pull it up if I can find it. Silver, there it is. Okay, so we see silver went gapping up and rushing up yesterday. Okay, looking on the first, it hit a pretty high point up here and then down it went. Okay, what do you think happens to silver if stimulus gets passed? Same as gold, inflationary safe haven paired against the USD. A weakening USD drives people to inflation safe havens like gold and silver, precious metals. So if they pass the stimulus, which it's expected they're going to, question is today, tomorrow, next day, next week, eventually they'll pass it. What happens to silver and gold, do you think, if they pass this huge stimulus and they print all kinds of US dollars? Inflation fears, potentially silver could go back up. So in anticipation of that, you could say, all right, I can buy on silver now. Okay, that's one option, right? One option is buy on silver now, put your stop loss below a price that you think it won't drop, whether it's a small risk below one support level or a longer term move below a more major support level like down here, okay, below this support down here, okay? And that's up to you. Depends if you're short-term scalping, longer-term move. The other option is to put a pending order, or you could do both. Take half your position now, in case it runs up now, put a pending order just below or just above this support to buy maybe from down here with a buy limit in case it pulls down before it going up, as you might anticipate. Okay, so I view bigger picture potentially bullish on silver with the potential inflationary situation with large stimulus maybe being passed. Okay. All right. Any questions before we end things here? Yeah, keep in mind, everybody, what we're going over here is not meant to be me telling you you should buy on silver, buy on gold, or sell on this or buy on that. It's based on the fundamentals, what makes sense, okay? It's what makes sense fundamentally. And with each and every trade, you could lose. That's why we limit our risk. Trading's all about potential. And the potential here to come back up to where it already was not that long ago far outweighs the risk, whether you put your stop loss here or below the bigger support here. Your potential profit's much larger. And the fundamentals appear to be on your side. And that's what trading is. All right, everybody. Thank you for joining. Thank you for the kind words. I appreciate it. And good luck with your trading. I really think you can get some huge movements still today on silver, gold, oil, and these major indices. Okay? All right. Good luck, everybody. Make lots of profits. Bye for now.